Counting down the days, the future feels so distant. A lot of things have changed, and few have been resistant.
Happy Tuesday. Once again, I'm exactly on time. That's it. I'm on time in like the time dilation world that I seem to live in, where 7 minutes late is actually on time. But I'm going to allow it. Considering I was like half an hour late last week, so all good. Let's turn this down a touch. Hello, Luke. Turn it down a touch more. Okay. How's everyone today? So today, I don't think this is going to be like a 2-hour stream today. I feel like today's going to be shorter. Let me give you a little update. What's going on with my life? I know you will care. Hello, Master J. So went to see a new apartment today because I'm sleeping here in the studio and it looks all nice and swish from where you are, but it's a mess. It's a little tiny studio that a friend of mine has and isn't using, or it's his like parents that they don't use, and they can't use it because they've got these old paintings. Like that's his like great granddad. That's, you can't see, that's Jesus up there watching over my shoulder, and then there's another painting over there. So they can't rent it out on Airbnb because they don't trust people to like not have parties and ruin the painting. So I just managed to slip in here as a perfect little studio. But I'm sleeping here because we've left the old apartment. One of my flatmates, he's gone over to America to play poker, and he's coming back at the end of the month. And then another guy's in another Airbnb. So we're looking for places. We thought we found one before my mate left, and but the estate, the owner's like dilly-dallying. That's a funny word. Contemplating actually selling it rather than renting it. So we're like, okay, let's just keep looking. And I was looking today and I found one that was like, it looks perfect. It looked perfect. Nice and big, nice and spacious, right in the center, exactly where we want to be. And in terms of me, you know, in a studio, big rooms. And I was just like, I could imagine like the studio there. So that's, and we've accepted it. I'm just waiting for the owner to kind of like, you know, give us the all clear. So that feels good. Because at the moment, I'm in this tiny cramped space. I'm climbing over all my equipment and lights and everything else, and it's it's not perfect. So I'm looking forward to getting into a nice big room with the where I can put the studio, and then just getting into a nice, great work routine. I did a little trade today. So again, I've been too busy recently to do anything other than like the analysis that I'm doing either for, you know, or for you, or up until recently stuff for the course. And now, okay, so now the move to Decentralists is almost over. I'm just sending a few more, scheduling out a few more emails to go out to everyone to let them know to join the new Decentralists newsletter list. Then moving into this new awesome apartment with my mates. And then, just getting into a sweet routine where every day I'll be looking at charts. Every day, if I see opportunities, I'll be actually putting those trades in. And then we've got some cool stuff, more cool stuff to talk about on these streams. Like, hey, here's a trade I did, or here's a trade I've got live. Here was my thought process. What do you guys think? You know, all that kind of stuff. And there'll be even more cool stuff for what we're now calling the Freedom Academy. So I'm thinking of, once I get into a really good routine and I'm actually looking at charts with you know, actually the mind of trading them, recording the whole process so that everyone, and I'm just like voicing it as I go. It won't be as like kind of like bah as this, because when I'm actually doing it for real, I just kind of go quiet, and then I'll just, you know, so it's not as kind of, I'm not trying to present. It would be just like, you know. And that'll be really valuable for people, I think. But again, it's just there's all these things that have to happen at the same time. I'm still working on everything else. So it's about just being disciplined, getting a good routine in, and I'm getting there. I'm getting there. So let me move this away so I can see the chat. Okay. Jeff Jenner, how are you? Hello, Netbroker. Hello, Marcus. I feel like this is too loud. Let's turn that down a touch. There we go. I think that's a bit better. So I think that's all today. I'm going to just show you this short that I've got open, and I'll show you why I did it. But this is the kind of stuff I want to do more of, right? Because as you guys know, I've been just really busy with all the surrounding stuff. But this is the kind of stuff that I want to be able to do, and then talk about it on the stream, as well as other things as well. So, if you remember, this is going to work. There it is. So, if you remember from literally like the last thing we did on yesterday's stream, let's put this full screen. So let me just zoom in a little bit. So on last night's stream, we were around here, literally like, what was that, 8 o'clock? These are the 1 hour. So 1 hour, 8 o'clock. Well, we started here, 9 o'clock. So literally like it started to move down. It was kind of here. And then as the stream ended, it just, it launched itself down over the next hour, right? And at the end of the stream, well, the penultimate conclusion was, I'm not sure what's going to happen, guys. We've got this bullish pitchfork and this bearish pitchfork. Price has been responding to both, and I wasn't quite sure. But then I ended the stream saying, but you know what? Price seems to be responding to this bearish one more. Price is broken down out the bottom of this this bullish pitchfork while adhering to the geometry of this bearish pitchfork. So I said, yeah, I think we're going bearish. And price, you know, came back down, broke this market structure. Let me show you. It broke this market structure. Right, it broke that market structure, so we can make that dotted. It broke this market structure. And, well, that's it for now. But these are two key market structure levels. It's got lower low, and then a higher low, and then it just broke through both of them. And it was climbing up today, and I wasn't, like, watching it intently. I was working on the next newsletter to send to the Wave Counters group to invite them onto the Decentralist newsletter. And I popped into the charts, and I saw it come right up into this energy point here. But it didn't break this this lower high right here. It didn't break that lower high. And then it started to come back down. And yeah, so I thought I'd open a short. I would have liked to get in a bit early, but I didn't catch it up there. And place the stop not above this point, not above this point, but above this point back here. So it's just above 3 market structure levels, and that's totally fine, given that the first target is down here, the second target I've got is down here. So it's like, you might have seen me talk about what I call corner trades, right? And the corner trades are, well, I haven't got to get a new pitchfork. Like, this is a corner trade. Now, this isn't a perfect corner trade because there hasn't been any sort of major break in market structure before these touches. But in terms of touches, you've got this lower parallel is tested, price comes up, and you do get, actually no, there is some break in market structure. There's this level right here, but it's not huge, right? There's that level there. We do get a break. There. So we get one break, not huge, right? One break of market structure there. It breaks up, comes back down, gives us our second touch. You know, and that's called a corner trade because it's the corner of the pitchfork, and that is the best, highest probability way of getting in at the very, like, of picking the tops and bottoms. But obviously, when you do that, you're going to get it wrong a bunch of times. But because of the high reward to risk ratio that these kinds of trades offer, like you put the stop sort of, yeah, like just sort of down there, and then the median line's up here, so you get a really nice like 6-7 to 1 reward to risk ratio. So you can get it right, you can get it wrong a bunch of times and still make money. But obviously they are higher risk because you're trading against. It's a counter trend trade. And you've heard the trend is your friend, right? The trend is your friend. So I like this trade, and we'll see where it goes, because I believe that this represents a change in trend. We've got some, lower lows, lower highs, lower low now, and a potential lower high. And so I thought it was a good move. It's and then when price came down, it didn't quite reach this median line the first time. And then we've got this move out here, and I think that looks like a nice phase shift. So yeah, just all things in all, I like that, and we'll see how it plays out. And because I remember, like, for a lot of time, a lot of people were really stressing over the idea of shorting, and it's really absolutely no different than going long. It really isn't. It's exactly the same. Now, it's obviously very different if you're doing spot, but I prefer futures. I prefer trading futures contracts just because the going long, going short, adding leverage is just so easy. It's so easy. And so I predominantly just focus on futures. And if you're looking at futures, it's like long and short are just two different buttons, and it's the same thing. You're buying a short contract, you're buying a long contract. And so there's no reason to stress about shorting or longing. You know, you're still going to be managing your risk. You're still going to be managing your position size such that the stop that you set isn't going to make you lose more than 2% of your entire account maximum. I'm not saying that you should always max out like that you will stand to lose 1.98% when you're first starting, before you've proven to yourself that you're on the right track at least, and you're at least breaking even. You don't want to be risking more than 1% of your account per trade personally, and that account again shouldn't be a huge account. The amount of horror stories I've heard of people who have a lot of capital to put down, and they start trading with like a fucking 100k account, and like if you're down 20% on a 100k account, you're down 20 grand like when you're learning. Whereas if you just start with a $100 account, you're down 20 quid, And also when you start with a lower, like a smaller account when you're learning, it actually teaches you, and if you've read Mark Douglas's book, he's got a few books, but his sort of main one, Trading in the Zone, and that whole book is about the psychology that you need. You need to be able to be trading with this sense of ease, this kind of this like lightness to you. And when you are trading with a very, very small account, relative to if you're a baller and you're like a multi-millionaire, and to you a small account is 20 grand, all good, man, or 100 grand. But if a $100 account isn't a big deal to you, it's play money, then you actually get to practice the mindset you need to be in, right? That's not like where you don't give a shit kind of thing, but the mindset of ease, of like just putting a trade on and just being relaxed, because it's just like you're risking a dollar or two. But that's the exact same mindset, the exact same feeling you've got to have whether you're trading a $100 account or a $10 million, $100 million account. Now, I've never traded that kind of size. Future aspirations, of course. But it's the same feeling of lightness that Mark Douglas talks about, and it's absolutely true. And so, you should be starting off with very, very small amounts of money. Well, first of all, you start off with simulating your trades, but once you are confident enough to start doing it with real money, even though you're keen to get started, you're keen to start earning money, what's the opposite of patience? The opposite of patience, eagerness. That's the wrong word. The opposite of patience, desperation. I don't know. When you're feeling that, that's going to be to your detriment. You've got to be patient. And when you start trading, once you've developed the skill set, you've developed your edge by learning from anyone, whoever you're learning from. Notice how you feel when you're doing a trade where you're risking $1. Notice how you feel, right? You kind of feel at ease. It's good practice to do that, because then you need to associate that feeling with trading. So it's not about how much am I risking in dollar, in the dollar sizes. It is in terms of percentages. You never want to risk more than 2% of your account, like I said. Impatience. God, obviously. Impatience. Thank you, Jeff Jenner. Yeah, I'm having a dummy day today. But that feeling of lightness and of ease, that's the feeling that you should have when you're trading, regardless of the amount. That's the goal. Obviously, we're still human, right? But that's the ideal that we want to be reaching for. So, how are you guys doing anyway? How are you guys doing with the course? Actually, yes, I'll talk about the course. So, what my plans are, like in terms of time frame. So, what day is it today? It's Wednesday? It's Tuesday. God, okay. So, I predict that I'll have all of the newsletters that I want to get sent out all scheduled for the end of the week, and my focus then, once that's done, my entire focus is on the wave counting immersion course. First, splitting up into the respective smaller versions. I don't think that will take too long. I do intend to add more things to those courses, but in the beginning, it's just about kind of separating them. And then my focus will be continuing work on that next module. So it's not too long to wait. For everyone who's been really patient, I really appreciate it. But it's all going to be, this is all in the service of making what we're doing a lot more powerful, and being in the position where we can build a community that is the best, not just crypto trading community, obviously, but the best community of freedom seekers all over the world, helping each other. Because I want this to be, and from the beginning I've wanted this, where this is a breeding ground. That's the wrong phrase. Of like crowdsourced intelligence, crowdsourced research and analysis. So it's not just you on your own, like, oh, is this a good opportunity? Is this a good trade setup? Imagine, like, because rather than just you on your own, and again, this expands beyond just crypto trading, it expands into investing, it expands into every possible area, the goal in the future, every possible area of helping you become more free. And imagine, rather than just you on your own, as whether you're a rookie, you're learning, or you're more experienced, looking at a chart and thinking, oh man, like, yeah, I'm not quite sure about this. I think it's going to do this. And now imagine you've got 1,000 other voices, 1,000 other people who are like, yeah, I'm also looking at this, but here's why I think this is really good because of this. You go, oh yeah, I didn't see that. Of course, I didn't think about that. Like 1,000 voices. And this is where you can crowdsource. This is the whole point of this. This is the power of community. Crowdsourced intelligence, crowdsourced research. So so we're all just kind of inching towards that. I'm looking forward to getting back to the course. And really, just from an accomplishment perspective, I started this course, like over a year and a half ago now, and I can't wait until it's completed. It's like a finished project, and it accomplishes the mission that I set out when I first started, which was I was speaking to Shaman today. I don't know if Shaman's watching. I was speaking to Shaman today. We had a team meeting, and he was saying there was one of the guys in the you guys are all doing great. All you guys working with Shaman in the student houses, but he called out a couple of names, and one in particular, saying that this person could hardly even use a computer. Like not like the guy says himself, could hardly use a computer at the beginning, and now he's like the star student with amazing charts and everything else. And that's kind of what I set out to do with the Wave Counting Immersion course. Take someone from complete beginner, and maybe there's some of you here now who are complete absolute beginners. Now some of you weren't. Like, we had some people in the course who were already trading, even some people were and they wanted to just kind of add to their knowledge. But there were some people, a great number of people, who had never done anything like this whatsoever. If this was you, then speak up in the chat. I find it so rewarding, I really do. And I remember taking the first, the Lions, the Jaguars, and then we obviously got the help of the student coaches, and seeing people who were like opening up TradingView for the very, very first time, and just watching them go through that process. And then you get to see, like, months and months and months later on, the later modules, and they're producing these charts with all, the really brilliant wave counts, and they're looking at the volume, and it's just it's really rewarding. And that's what I set out to do, to take somebody from complete beginner all the way through to the point where you can start noticing trade setups. You understand how to analyze risk, how to structure your and as we go through the course, how to make those trades and manage those trades, and how to all that stuff right from start to finish. That was the ambition, which turns out to be probably a bit too ambitious, but hey. And this is why I need to split the course up into smaller bite-sized courses, because although you guys, you nutters, just like dove in, there's lots of people that would be too scary. Like a year-long course or something, it's too intense for your average person. So we're going to be breaking it up into your what I'm going to be calling the trading operating system, and then the different applications, etc., etc. Marcus said I knew nothing. Jiv Jenner says never done anything like this, total beginner. Yeah. That's the most rewarding. It's cool if someone's like, there's a few of you who were, a bit seasoned, you'd been around a bit. But to see somebody who's looking at TradingView for the first time, drawing their first line, to be able to do like sophisticated analysis. I mean, if you show any of your, like, look, I remember when I got into this in 2016 and I started to learn, you know, technical analysis just from YouTube, and I took some courses. I did sign up to some premium communities, and actually that's what inspired me to build my own community years later, because the community aspect was actually the most valuable, because then you're getting all these minds, all these questions and opinions and thoughts and stuff, and it's really valuable. But on that journey of just trying stuff and taking this course and learning about Ichimoku clouds and Bollinger Bands and, you know, all these vast variety of things, you just try this and, you know, and I couldn't find a cohesive kind of structured step-by-step building block, like, which is what I've attempted to do with wave counting immersion. It's not just random stuff. It's like, it's trying to, like, a structure, like building a structure and taking someone on a very purposeful direction and path through this kind of jungle of knowledge. That was the attempt, and so far I've been getting some very positive reviews, and everyone seems to like it. I know a lot of people are frustrated with the delays. I'm sorry about that, but for those of you who've kind of gone the distance, I've been getting some really cool comments. So Luke says, I'm not techie at all and a complete novice to trading till your course. Yeah, it makes me feel warm inside, like a little warm tingly feeling. I like it. Okay, so it looks like price fell down below this lower parallel, and it came back up and tested it nicely, and it's starting to fall again, but we will see. So again, this is a great example of the kind of trading that I like to do. It's a swing trade. And so this is the hourly chart. So if it does what the trade setup is kind of hoping for, then it's something, it might not end, let's say it gets down here, or this energy point, let's say right there. And that would be April the 6th. So that's going to be in like a week or something. Hang on, what's the date today? April 4th today. April 4th. So yeah, it's like a few days. That's a few days. Now, obviously, this second target is kind of taking us down here. Oh, it's kind of assuming it takes longer to get down to maybe to, let's say, this energy point there. And that's going to be on April the 9th. So that's going to be like, you know, 5 days. And that's like a swing trade. Now, swing trade can be, you know, anything after a day, you're kind of moving to swing territory. You've got day trading, and then you've got anything after that, it's technically swing trading. But a swing trade could last weeks. A swing trade could last months, although I think you're getting more into position trading there. But these definitions, there's a lot of, you know, crossover. But yeah, like a trade that lasts a few days, it's like, yeah, that's the kind of swing trading that, at least in this particular move, where if we do get this, I'll go into a higher time frame. If we do get, you know, whatever, and let's say that's the end of the fourth wave, and we're going to get another fifth wave up. Yeah, that might be tradable as well. We'll see. Again, you just have to wait and see how it goes. And again, assuming the wave counts correct. If we do get that, and if this is, and the cool thing is, remember I said that if this was a sideways moving wave 4, or ends up being a triangle or something, then the final push up would take us into it would take us to a level that would make me very uncomfortable. Let me reword that. Nothing makes me uncomfortable. Discomfort is only resisting what is, in terms of trading. And so, what I mean is, if this wave count had a personality, then this wave count would be unhappy. It would be worried for its existence, right? Because that would predict that price would pop up above this volume area. But the deeper this wave 4, again, assuming this is wave 4 and this is correct, because if, according to this wave count, we've got a tiny little wave 2 down here, right, which is nuts. But this, I'm going with this because of the where the volume is. Wave 3 of 3 of, wave 3 of 3 of 3, and that's where the volume is, right? So if that's the case, tiny little wave 1. So this wave, if this is a wave 4, this wave 4 can do whatever the fuck it wants, right? This wave 4 is a complete freestyler. So the deeper this wave 4 becomes, although if this wave count is correct, we've got a like an X that has exceeded the beginning of the W, and so we wouldn't. I'd be surprised if we got anything really deep. But the deeper this goes, assuming it's wave 4, then the more okay it would be for this 5 to not actually break up too high. And remember I talked about how there was the possibility of that a kind of manipulation, the kind of thing that I would do if I was an institution. In order, there's a, you know, it's tried to break up above this point of control. It hasn't done it, and so it's hovering below 30,000. If it comes up and it doesn't quite break 30,000, there could be the opportunity to, you know, all of the retailers would go short and put their stop loss up here perhaps, and all the breakout traders would prepare their longs as soon as it breaks 30,000. And so the institutions might think, sweet, let's break it up there, gobble up all that liquidity, and then force it back down, and then you know, and that would be fine if it breaks above 30,000. That's still, where's 30,000? Right, sort of near there. So yeah, if it broke out above 30,000, you know, and then just immediately came back down, then this flat correction, expanding flat correction would still potentially be valid. And even if it wasn't, and this actually is the first impulse of the coming bull run, you're still going to get a correction down. So if this does play out like this and we do get that nice push up, then that move down will be a much greater swing trade. Well, if this wave count is correct, because that swing trade, if let's say we take it here, like let's say, I don't know, like 10th of April, then it could take us all the way in. It could last a couple of months, and that'd be like a couple of months trade. So that's a swing trade. There's one swing trade that's a few days, another swing trade that's a few months, and it all depends on your time scale, right? It all depends on the time frame that you're looking at. Hey Paul, good to see you. Are there any questions? This is me just like rambling on. Does anybody have any questions for me? I predict this is going to be a shorter stream today. I think the length of the stream is going to often be dictated by the number of people watching. Because the more people watching, the more questions I get and the more kind of inspiration for things to talk about. But when there's not many people that are live, I just run out of things to. I can't think of what to think about, what to talk about, what to show you. Jif Jenner says, can you make two trades at the same time in perpetual futures? In Binance you can. They've got a hedge feature, but in KuCoin you can't. Right, not on the same trading pair. Right, so in perpetual futures in KuCoin, which is actually the one that I use because I don't do hedging. At least at the moment, I'm interested in it, but it's not really my style. So yeah, Binance has a hedging feature where you can do multiple. You can go long at the same time. You can go short. You know, so if I wanted to hedge, let's say I was long and I wanted to take advantage of the corrections, I'd just go into Binance and do it there, or vice versa. But yeah, in KuCoin, if you've got a long and you add a short, it will deduct it from your long. It's it's annoying. And vice versa. If you have a long and then you do another long, it will kind of merge it with your existing long and then adjust your entry. And same thing with the short. So bit annoying. It'd be cool if they had that feature with that Binance has. Oh, and this line here is just some geometry that I thought was interesting, right? As I was sort of eyeing up this potential short, I was like, there's like, it looks like I'm seeing some kind of geometry there that price seems to be responding to, and it's kind of that's it really. It wasn't really a lot of thought gone into it. I didn't make the trade because of it. I'm kind of just seeing if this geometry is matched up anywhere. I haven't looked at this yet. Probably not. So yeah, it's not a reason to make a trade. I just kind of saw it and thought, huh, interesting. That's it. Jib Jenner says, how do you work out a stop loss in a corner trade? Well, a corner trade is only viable if, I'll show you. Let's have a look. Because this isn't a corner trade, Jib Jenner, right? So a corner trade, I mean, this didn't give us a chance to do a corner trade. It just launched straight down. But this had a corner trade potential, not perfect, right? So we came back down. We came down and we pierced the lower parallel, came back up, and we broke kind of one market structure level just there, just one, which means it wasn't a super strong corner trade, but then it broke that level. So it's a change in market structure. We got a lower high, lower high, lower high, and all of a sudden we have a higher high, one higher high that breaks that market structure, and we come back down and we get another touch, right? And that's the second test, and that would be the entry for the for this corner trade. And then the stop, personally, I would place the stop under this, under here, and because you could be really tight and go under here, but personally, this is close enough, and the target is far away enough where we can afford this stop. Right, that even just there, that's a 6-1. But we, to reach the median line, which you can see it does perfectly. I mean, that's it's a 6.8 to 1 trade, so you can 100% afford that stop. But I would also look for potential, because we've got a level here. That's not quite there, and again, you've got to look for potential stop loss hunts. So if the target is way up there, you can actually afford to have a bit more leeway with your stop. So if some institutions think, oh, there's going to be people going along here, and they bring the price right down here, you can protect yourself. So in that instance, it might be good to have. And this is the great thing about corner trades. But again, you've got to factor into the fact you got to factor in that corner trades are more risky, and so you need to accommodate. You need to make up for the other times when you do this and you're going to be wrong. So again, you've got to weigh it all in. Like, yes, you can afford this this bigger stop because of the risk reward ratio, and to protect yourself from potential manipulations, stop loss hunts. The reward to risk ratio needs to be bigger, needs to be more favorable to you in these kinds of trades, because you are going to get it wrong in these trades a lot more than the kind of trades where you're going with the trend. This is against the trend. I mean, I suppose it's relative to the time frame, because if you're looking at this at a macro scale, it's in an uptrend, and this is just the correction in that uptrend. But if you go in closer, you've got a downtrend, lower, like big lower low, higher low, lower low, lower high, and we come down again, and so it's just something we've got to factor in. But this is the beauty of Elliott wave as well. Now, this is not quite fair, because I've actually only updated this particular wave count, having this as the wave 3 on yesterday's stream. So but this is the cool thing about Elliott, because Elliott gives you that kind of context underneath the market geometry to help you add extra layers of probability into your analysis. NetBroker, just go higher or lower than where everyone would expect to put your stop loss, to not get stopped out by the big boys. Yeah. A great piece of advice that I saw was he was saying, place your buy order exactly where you would normally place your stop loss, and you'll be fine. So I don't totally go with that. But yeah, if you're thinking, for example, okay, let's make a nice tight stop loss right here. Well, the institutions might know that, okay, that's exactly where people are going to place their stop losses. So I think in this instance, it'll be down here. But personally, it's not like in hindsight, fine, but you get one break in market structure. And look, that might be your style. You're okay with getting stopped out more because you get in too early with your trades, and you don't hit the corners, and so you get stopped out a lot more because you take more trades that haven't been confirmed as much. But you might enjoy that more, and it might mean that you actually end up more profitable than normal, because although you get stopped out more, you actually get into more successful trades. And this is something you just need to sort of test for yourself and see whatever your, go with whatever your style is. And once you get to a certain size, you actually, there's only a certain number of trades that you can actually get into in the first place, because every time you get in, you have to, you can't just buy in one go, because you'll move the market, because your position sizes are too big. And so you've got to do it in small amounts, and you've got to start thinking about like, where is the liquidity, and you've got to start thinking more like an institution, because you might, you get to that kind of whale status. And it's not just about pressing long or short. It's about hunting for liquidity and finding out where the liquidity is. But if you're at that point, these are high quality problems, and that's not something I suppose any of you are at that place just yet. I'm not a whale yet, although it's definitely an ambition of mine. But yeah, nice big juicy whale. But anyway. But yeah, in terms of stop loss, I just put it behind the next most major market structure. So in this like short position here, I don't put it just above here, because it's just too easy for institutions to go, oh, I'll have that. And because there's this level that's right there, and then also just right here, I'm and because of the target, I'm totally happy putting it by not one, not two, but above the third market structure level there. And this is an upper parallel. It's a parallel trade rather than a corner trade, and so we've already got like nice confirmations that at the moment we're in a downtrend. So we are trading with the trend with this short, rather than counter trend by trying to trade it on a corner. Now I love corner trades. I love them. But this is trading with the trend. But trading with the trend or against the trend is a relative term, because I've just said we're trading with the trend, with this bearish pitchfork, right? We've got that was the previous, well, this is this is the high, and then we've got a low. Relative to this is the higher low, but in the short term we've got like a lower high, a lower low, lower high, lower low. We break up and we don't break this, we get a lower high. We break down, we get a lower low. So in the short term, this is now the trend has changed to the downside, and then this trade is against the trend. But when we go up into the higher time scales, right? So we're going short. Well, so far the trend has been going up, up. So we're trading technically against the trend in this time frame, but we're not trading this time frame, right? A short in this time frame, the target would be way down here according to this particular pitchfork. Although we're not. This is a tentative pitchfork. I just placed this here, not arbitrarily, but just kind of it's like in a holding pattern, just kind of waiting, biding its time. But if we did get that, if this is a fourth wave correction we're in now, and we do get that push up, right, to wherever, then I would move the pitchfork over, right? And then now we're going to be looking for that corner trade. And ideally we would get, from this perspective, we would get, hopefully, a move down. Oh, is that a curve? How did I do that? We'd get, break the market structure, or some market structure, maybe there, right? See that point there, break some market structure, and then, come up, touch, and then a retouch, and then that would be the perfect corner trade. And then that's a beautiful potential drop. Anyway, this is all hypothesis, means nothing. Anything could happen. Anything could happen. Any more questions, thoughts? Maybe you've got a poem you've written for me. We'll move this back though. Move this back. What do you guys think about that news? That who was it? I think it was Marcus who shared it in the. So it was either Marcus or Barry, I forget. Who in the network, was it in the news section? I hope so. That'd be the right section. Might have been the lounge. It might have been in the lounge. If it is in the lounge, I'm going to move it to the news because it should be in the news. Well, who was it? Who posted it? It was about how the US government is selling thousands of Bitcoin, or they're going to be selling thousands of Bitcoin. Was it you, Marcus? Was it Barry? Where did you post it? Was it the Crypto Lounge? Where did you guys post it? I'll go to the feed and see if I see it there. It was okay. It was Barry, and he posted it in. Oh, it's in a secret. Where did he post this? Oh, in House Lions. Okay, fair enough. But I saw a news article that the government is planning on selling, thousands of Bitcoin. What do you guys think is going to happen to the price of Bitcoin? I saw one commentator, shall we say, that thinks that it would. He's very bullish, right? He thinks he's of the mind that the bottom's in. Right, this guy that was listening to, he thinks the bottom's in. This is the beginning of the bull run. So he thinks that that Bitcoin will be gobbled up by the market, and it will have hardly an impact. What do you guys think? Marcus is on the feed. Luke says it was Barry. Yeah, it was Barry. Worked it out. Yeah. Netbroker says US government will be selling 1 billion. 1 billion No. You mean $1 billion worth of Bitcoin? Because a billion Bitcoins don't exist. So I don't think they're going to be selling a billion. No, they're selling like a few thousand Bitcoin or something. Let me see if I can find out. Let's do some research. US government selling Bitcoin. US government to sell 0.7501 Bitcoin. What? Oh, that's 2021. Okay. Let's find something in 2023. Why would it show me articles from 2023? 4 days ago. US government to sell 41,500 Bitcoin linked to Silk Road. Well, this is interesting though, isn't it? Because the government doesn't want to... Aren't the government doing some really kind of shady anti-crypto stuff? But it's in their best interest to not fuck up Bitcoin while they sell it to get the most money for it. US government to sell 41,500 Bitcoin linked to Silk Road in 2023. So 41,500 at the current price. Which is like what, 28,500. So let's do the math on that. So 28,500, let's say, times 41,500. That's 1 point. Oh, this is what you meant, Netbroker. Yeah, sorry. Yeah. Yeah, you're right. According to my calculations, 1.1 billion. But yeah, you're on the nose. $1 billion worth of Bitcoin. What's the total market cap of Bitcoin right now? Market. Oh, sorry. What am I doing? Coin market cap. The total market cap is 500 billion. So yeah, like it's not really a huge dent, is it? 1 billion when the total market cap is 554 million. So it's less. It's like 0.2% or something of something like that, like 0.2% of Bitcoin's entire market cap. Because a billion sounds scary, but the market cap is $500 billion. So maybe this guy who I was watching, who's very, very bullish, like now, I'm obviously bullish long term. Maybe he's right that it's not going to have a blip. And apparently, again, going to this, apparently they said they're going to sell it in, yeah, here you go, in 4 batches. Oh, so yeah, 4 more batches over the year. The sale on March the 14th was the first round of liquidation from the case. So March the 14th, did we have any significant price movement on the March the 14th? Price was going up. If I go, so you go here. So this is the daily chart, right? They sold. This is March 14th here. So price was rocketing up. And I mean, remind me, guys, was this the FTX thing down here? Where was the FTX thing? Or was that the FTX thing? Oh God, my memory's so shit. That was November 2022. But they sold into the price going up, and it brought the, if that's what it did, it brought the price back down here, and then price just kept on going. So, so if the first batch, how much was the first batch? So they sold almost 10,000 Bitcoin, and it did a little blip on the price, and essentially they're going to be doing the same thing 4 more times. So, you know, that guy's right. If the price is bullish, then it's just going to be absorbed by the market. NetBroker says it's actually 50,000 BTC stolen from Silk Road to be sold in 4 lots during 2023. Oh, so this article's wrong then. Okay. Well, this article says that it's already sold close to 10,000 Bitcoin, and it did it on March 14th. You're saying this article's wrong? NetBroker says November 2022. All right, so that was the FTX thing. So it wasn't this. It wasn't here then. It was back there. But anyway, so it looks like that guy's right that it's not. It can move Bitcoin price obviously, but it's not gonna. It wouldn't necessarily. If someone's like, oh well, they're gonna sell that Bitcoin, it's gonna crush the price because of that. Now, because I'm a technicals guy over fundamentals, that if price now wants to turn around and the wave structure, the crowd psychology, the group collective consciousness, now price has to go down, then that dump would exacerbate that. But we see here in this bullish cycle from here to here, that dump, assuming that dump had the effect on this what we see now, it just dampened the price, and then it just kept rocketing up. Whereas if that happened during a bear cycle like here, then you would have potentially seen a much greater move down rather than this move down going counter to the direction that price wanted to go because of the crowd psychology patterns that wanted to show up. Just realized you guys couldn't see what I was showing you. My bad, sorry. Yeah, Marcus's articles. Yeah, so I've got my buttons, but I forgot to press them. But I think you could see what I was you can imagine what I was doing. Oh. Well, I've got nothing more to add. Oh, tonight I need some prompting. Oh, that's the point. I need to buy some flights. It's my grandmother's 92nd birthday on Saturday, and so I'm going to fly over there on Friday, and my family are going for a dinner, so I'm going to surprise her. So nobody tell her, right? Nobody ruin the surprise. 92. Yeah, man. So yeah, the plan is to fly over there on Friday and then stay at my parents', go to dinner on the Saturday, stay over, and then if the flights work out, then fly back on the Sunday so that this stream isn't interrupted. Pardon me. And then back to work normally on the Monday. So no one tell my nan, all right? It's just a little secret between us. So yeah, any questions? If you guys have no questions, I'm gonna just have do you want to see me play a game of chess? How boring would that be on a scale of 1 to 10? I play chess like 4 or 5 times a day. I've got an app on my phone, so I'll have breakfast, I'll play a game of chess, I'll have dinner, game of chess, lunch, game of chess. Oh, Jif Jenner, how's the NFC project going? Great, yeah, okay, that's a perfect thing to talk about. You see, this is why it's important, because there's so much I could talk about there. So, okay, I'll get to that in a second. NetBroker says, would you like to simulate a short trade on KuCoin Would I like to simulate a short trade on KuCoin or Binance? Wait, are you asking me would I prefer to simulate a short trade on KuCoin or Binance? Or you're saying, could you simulate a short trade on KuCoin or Binance? Which one are you saying? And then we'll talk about the NFT project. Because, I mean, how many founders we got here? We've got probably a few founders, right? Peopleom. Oh, wait, hang on a second. I'll say, okay, Peopleom has shared a link, but in the Twitch. You guys on YouTube can't see the link. Okay, so on YouTube you can't share links, but on Twitch you can. So if you go into Twitch, Peopleom shared an article, and it's cointelegraph.com, and it's about, US government plans to sell 41,000 Bitcoin connected to Silk Road. So it's like what we've got on screen here. So, you know. So yeah, there it is. Cheers, Peopleom. Paul says, do you hear... I'm reading something in my head. Did you base your take profits on the trade purely on the PowerPoints or something else like Fibonacci levels? No, not Fibonacci levels. The only time I use Fibonacci levels on profit targets for trades is when you're trying to anticipate the end of particular waves. So, for example, if you're doing like a 5th wave trade, if 1, 2, 3, 4, right, and you think that's the 4th wave, then I would look at the Fibonacci levels. What am I doing? Sometimes when you're like right now, I'm in the 1 hour. Okay, so you see nothing's coming up. So if we double click on that, why wouldn't that be showing up? Oh, okay, there we go. So let's change it to the 3 to the 4 extension. Okay, that's not showing up. So there it is. Right, so from the 0 to the 3 to the 4, and then in a fifth wave trade, these are your potential targets: the 382, the 5, and the 618. So in that particular situation, this is where you might want to set your profit take 1, 2, and 3. Yeah, and if it's a third wave trade, well, you can either trade the third wave or trade the third and the fifth, and you might use Fibonacci again to like the prophecy extensions are my favorite Fibonacci projection for the for that third wave. So that's how I use those. And you can use that in combination with what I'm doing. Get rid of that. What I'm doing here. But I'm just targeting the first target is targeting the median line, right? Because price, if assuming the pivot points have been chosen correctly, then price has an 80% chance of reaching this pivot point, this line here. So this median line is the most logical place where price could potentially reach and bounce. Now, it doesn't mean that you're going to want to take profits exactly on the median line. You want to take profits, I'd say, about 10% before the median line. So in this case, you would have caught that, you'd have caught that. And so this sliding parallel might be a good take profit, maybe a touch before. And so, but because it's based on time, it's not like a level, because the further out, the longer it takes to reach this median line, the lower the target is going to be. So, as it comes down, it could, like, if it comes all the way down, all the way down here, then the target could be all the way down here. So it's kind of like a dynamic target. And these are only approximations. I'm sort of guessing just to get the most conservative risk to reward ratio here. But if price does continue out sort of in a more gradual way, then these targets won't be the same, right? So, and I added these energy points on afterwards, just as areas of interest, not as targets. Like, energy points aren't targets; they're just kind of areas of interest where you've got these different geometry lines that are intersecting. Hopefully that makes sense, Paul. Okay, let's talk about the NFTs. So first of all, we need to come up with a new name for the NFTs, because the central lines has been taken. But in a way, that's kind of trivial. Like, we'll think of a new name, cool. That's not really that important. And so, again, once the decentralist shift has been done completely, and the goal was to have that all done for the end of the week, then my focus is going to be on the course, so that I'm keeping everyone happy, and we're going to keep making progress on your learning, your development. And then at the same time, once that's kind of underway, because that's the kind of ongoing thing. There's still like a good bunch of modules left, so that's going to take quite a bit of time to get that. All the modules that I want to get that done. At the same time, I'm going to be focusing on my own trading, and that's going to complement this live stream and the academy, and it's going to complement everything. And at the same time, we need to start working on this, pushing this NFT project forward. And the first thing we're going to be doing is making sure, locking down the mechanics, how rare things are going to be, and this is something that we're going to be talking about together inside the Founders Club. And so. And again, it's just really about me just getting organized. And so once because we're moving over to a new email software to send out all the emails, and so the Founders Club is going to be a list inside there. And so it's just about getting organized. And then I apologize. It's just me. I say it's just me. We've got Martin working on the video editing. At the moment, he's focusing on taking clips out of this live stream and putting them on Instagram and TikTok, and soon we're going to be on YouTube Shorts and all that kind of stuff. Like, Martin's a beast; he's doing wicked stuff. Obviously, Shaman is taking good care of those of you in House Wolves, I think House Dragons. But in terms of everything else, it's all me, unfortunately. So it's just about just doing my best to get it all done. So that's probably not a satisfactory answer, Jif Jenner, but definitely soon. I can't wait to get back into it. I really can't. Right, what time is it? It's 9:09. So I've been I started like 5 minutes late, so I've been going for just over an hour. Yeah, any more questions? Oh yeah, NetBroker. You said, would you like to simulate a short trade on KuCoin or Binance? Oh, okay. Do you mean, can you actually go in and click and show us like what the short and all that kind of stuff looks like? Is that what you're saying? I'm assuming that's what you mean. Didn't I in the course? There's a long video where I do exactly that. Like module. In my mind, I'm thinking module 13. There's like a video where I do exactly that. I take you through KuCoin. I show you exactly how to do it. And I also show you how to use the calculator to help you look at where the liquidation level is going to be. Like a NetBroker, like what module are you on? Because if you watch the whole thing, and in fact, this reminds me that I actually made, because there was a lot of you who were chomping at the bit to learn how to short before I got to module 13. I think it was 13. And actually made an hour-long separate video. Martin will know where it is. I can get it. Where I literally, the whole video is how to short. So if you haven't got that, Jif Jenner, then, when I say how to short, I mean how to short, taking you through Binance and KuCoin. Let's go down to the 1 minute. This is Binance, isn't it? Let's just play around in here. NetBroker says, yes, if you have the time. Yes, we've seen the modules, but just to refresh and see it in action again. All right, well, let me log into, why am I so low down in this chair? One of those like really comfy like lounge chairs. And if you don't think about it, you sort of end up just sort of lounging backwards. Where are we? Pardon me, I've got something in my eye. Which exchange are most of you guys using? Because I know in the US you guys have a lot of trouble using Binance. Hello, Fatima. Fatima says I missed a lot. What, today? Yeah, we've been going for about an hour. All right, so this is Binance, #1 exchange in the world. And so I do my analysis in TradingView, even though they've got like, you know, a chart and stuff. You can see here, right, this is the cool thing, the difference between spot and futures. You've got buy stroke long and sell stroke short, and you can choose the leverage that you want. Make sure that you're aware of whether you're in cross or isolated, because that means your margin, which is the amount of, you know, USDT in this case that you've got, that's your margin. And so if you are cross margin, it means that if you're trading different pairs like BTC and Ethereum, etc., it's all the margin, the money that's being used as your collateral is being used in every, if it's cross, it's being used in every single trade across all the different trading pairs. And that means if any one of those trading pairs goes south to such a degree that it liquidates, then all of your positions are closed. So isolated is the safest thing. It's the safest thing to do if you are going to be doing lots of different trading pairs. Otherwise, it doesn't make a difference. Cross is fine. And then the leverage that you do will depend entirely on the position size. So the way that I know this isn't particularly about shorting. Oh yeah, Fatima says that fake account. Have you managed to block it? Yeah, so I had my first ever fake account on Instagram. So my Instagram is Andy Create More, and in fact, thank you, Fatima. This is a good sort of public service announcement. So I had my first sort of faker person trying to be me. My Instagram is, in fact, I'll show you my Instagram. So this is my Instagram. This was my beautiful face before I cut my hair off, right? So Andy at Create More, that's my Instagram, Andy at Create More. And there's a fake account going around where it's real.Andy Create More. And he's got like 12,000 followers. I don't know where those followers came from. And yeah, he's been apparently following all my friends, following everybody and messaging them saying, hey, how's it going? So I'm assuming he's going to try and scam them or get him to send them Bitcoin or something. And but I can't see him, so he's obviously blocked me. And so it's my first faker. And I suppose this is, as this thing gets more and more popular, it's going to happen. I mean, as soon as it's a funny thing, as soon as I follow, it must be a thing with like crypto traders or something, because every time I follow a crypto trader, almost immediately I start getting followed by that account plus dots and underscores and you know, constantly, like loads of them. They must have like AI like bot farms or whatever. So it's annoying. And in America, in Instagram, they're rolling out a badge, right? So you have to verify your identity and they'll give you a badge. And so that means that they'll definitely end up rolling that out in the UK as well. So as soon as they roll it out, I'll be able to get a badge that proves yeah, this is the real Andy, you know. Hey Kaz, you are late to the show. You're an hour late. Where have you been? You missed all the good stuff, I'm afraid. All the good stuff. I've actually taught everyone how to make $1 billion instantly with crypto trading. So I'm afraid you missed that. So going back to this, you would choose your position size based on like if you've got like $1,000 account, you're going to choose your position size because you want to. Depends on your kind of trading style. If you like to do lots of different trading, like you want to trade Bitcoin, Ethereum, and other things, you would have a you could have an isolated margin and then distribute that money into those different trading pairs, and then you'd use isolated. But if you're only risking 2% of your account, you're not going to be risking liquidation, so you'll be fine. So you can do a cross margin without an issue. But you want to make sure that you're never risking more than 2% of your account. And if there's a very, 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 very tight stop loss, then you could technically go all in with your entire account, and you're still only risking, let's say, 1% because the top loss is so tight. And you think, well, I want to trade more. I want a bigger position than I can actually afford right now because I'm only risking 1% in my account. And let's say you've got more experience, you want to risk 1.5%. Well, then let's say you can risk 2%, and that's the rule I'm telling you guys, maximum 2%. And let's say you're risking 1%, and if you just trade with zero leverage, you're actually going all in. Well, you can actually go 2x leverage, right, in this particular example, and then you'd be risking then you'd only be spending $50 because you'd still be the way when you work it out on your spreadsheet, you're still risking the same amount, but now you're only spending $50. So what you could do is end up trading twice the amount, and then you do 2x leverage, and then it would cost you your total account, and you're still risking 2%. So that's how I decide the leverage. It's always based on, unless I'm planning on making lots of trades. Because let's say if I put my entire trade account into a trade like this, but again never risking more than 2%. Well, now I can't make any trades. If I find another entry in like Ethereum or on then I can't. I've used up all my dry powder. So that's another example where you think, okay, well, I'm going to use a bit more leverage, and then rather than spending my entire account, I'm spending like 20% of my account, and then I've got the rest 80 to do more trades if I want. So that's another factor of when and how you would use the leverage. But you're not just using leverage arbitrarily for no reason. It's always there to maximize the effectiveness of the trade you're making. And it allows you to control the amount of money that you're actually having to put down, while obviously at the same time always making sure you're never risking more than 2%. So, but let's say we decided, okay, 2% leverage, that's what we're doing on this particular trade, and you want to go short. And I normally use a KuCoin, but I want to jump into Binance. So I'm assuming if you press this, nope, doesn't do it. Oh, here we go. Entry size. So, okay, 0.05 Bitcoin, let's say. And if I press... look at this, because it knows I'm in the UK. As per our terms of use and compliance with local regulations, you are required to fill in an assessment before accessing this product. You'll be directed to that page. This is interesting. Because, yeah, I use KuCoin. It never... KuCoin might have asked me some questions, but I honestly can't remember. UK investor notice. To enable us to comply with UK financial regulations, you are required to provide the following confirmation before accessing certain products on Binance. Your answer, but I swear I've done this before with Binance. Maybe there's new regulations and they've got to sort of adhere to them. Your answer will help us determine whether your access to certain products is permitted or will be restricted. Well, I don't want to be restricted. This is why, like, bring on the move to decentralization, because this isn't Binance's fault. This is centralized governments trying to control this, something that eventually I think can't be controlled. If any, will be applied to all sub accounts associated with this account. Failure to do so may lead to a restriction being placed on your account. Please confirm which of the following categories you fall into. Okay, let's choose which one do you think will be the one that will allow me to have all the features. If you're unsure, please select category. None of the categories apply. None of the categories. High net worth entity, investment professional, previous overseas cost. So investment professional or high net worth entity. Investment professional, right? That's the one that they want to hear. If you fall into categories 2, 3, or 4, okay, 2, 3, 4, you'll be able to continue accessing these products after completing necessary verification. What's the verification? Otherwise, your access will be restricted and you'll be required to close any positions, blah, 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 blah. I hereby certify. Yeah, okay, cool. Fine. You previously indicated you was eligible. Your professional investment qualification certificates. Oh, fucking hell. Jesus. Okay, so we're not going to be using Binance. We're going to be using KuCoin. Cancel. But we would do limit, and let's say we've decided in TradingView, and you've used the these short tools, and you've decided, okay, my entry, and once you've got your entry here, your stop is here, and then your your stop's here, your target's here, and you just set that the way you like. Then your entry price here is 28249. I put that into the spreadsheet first, and then I put all of this into the spreadsheet, and I work out, this is how I work out, am I risking more than 2%? That is first before you always plan this stuff, and this then helps you plan the trade size. And so you go, okay, that's the entry there, and the stop I'm going to place above here. So the entry 28249. 28249. Right, there we go. And let's say you've done your is the chat in the way? No, it's fine. That's what I'll do. I'll just move the chat temporarily. Where are we? In fact, I'll come off the chat. I'll turn the chat off. There we go. Just for a second. And let's say you want to trade 0.1 Bitcoin. Let's say. Why isn't that working? Oh, because I'm pressing the wrong keyboard. So what did I say? 0.1 Bitcoin, let's say. Okay, and that's the limit order set, and in KuCoin they've got a little button you can tick, which is where you can set the take profits and the stop losses. And in KuCoin, it's there's two check boxes. One is you check this if you're opening a long position, and you check the other one if you're opening a short position. What's this one saying? It won't let me do it. It won't let me do it because I haven't filled in that form. And it's as simple as that, right? And then you press, you go short, bang, that's it. The position size is that, the price is that, and then when you go to click sell short, you've set the stop loss, which will be above where the price is at. You've already used the spreadsheet that we're providing inside the network to so you can work out the whether you're risking more than 2%, which you never want to do when you're first starting. You want to risk far, in my opinion, far less than that. And then you press sell short. It goes down into your open orders, and when price reaches your entry level, it will fill and it will go into your positions, and then it will show you the dynamic changing profit and loss ratio, percentage, and it will have your liquidation price, which you would already have factored in, and that liquidation price is well below, or it's below your stop loss, or in a short position it's above your stop loss, so you're never going to get liquidated. It will hit your stop loss before liquidation, because there's a cost to liquidation. There's like a fee that you get charged. You don't want to use the liquidation price as your stop loss, and then you watch it unfold, and that's how you do a short position. And in both in KuCoin and in Binance, you can add your take profit levels with the trade by clicking a box. But personally, because if we're doing a kind of trade where the target is dynamic and changing based on how long it takes to get there, then I don't type the take profit level in with the trade. I might decide to pop it in there if we like right now with this one. I've got these ones set as an extra trade, so which is just a counter trade, it's a long trade of the same amount. This is let's say that's 30%, sorry, that's like about 60% of the trade, and that's about 30% of the trade, let's say. then I've got that set as a long order for the same amount, and I've clicked to reduce entry, so it only kind of goes against this trade. It takes the profit essentially off a futures trade. I've got that set just in case there's some blast down overnight and it pings it, and I would want to take profit, and then it comes back up. So, but as price starts to sort of ladder down, based on what's happening, I may or may not decide to remove that, and then expecting it to go down further, let's say. Kaz says, this is why I use KuCoin. Yeah, I like KuCoin. Martin H says, futures doesn't work on Binance. Well, I don't know if you just saw me go through that, Martin. It asked me to prove that I'm I suppose like an accredited investor or something, or whatever. But that's totally against the whole spirit of crypto. It's not, the whole point of crypto is you can be like a talented trader that's just living in fucking wherever. That's what's exciting about King Silver. And so it kind of sucks, but that's the problem with a centralized exchange. You have to start playing ball with these like governments and stuff. And with a decentralized application, it's international. It's automated, it's perpetual, it's anti-fragile, ideally anti-fragile. Like Uniswap is I read this today actually. Uniswap, the trading volume on Uniswap is greater than Coinbase, and Uniswap is it all runs on smart contracts. I love it. It's absolutely beautiful. It's the epitome of freedom, something that exists on a distributed ledger that cannot be fucked with. No one can stop you going on and trading on Uniswap. And Uniswap is just like the first iteration of decentralized trading. It has currently no order book, it's algorithm based, but it has no kind of order book style functionality where you can create limit orders and market orders and stop losses and stuff. But that's coming, and you can see that with DYDX. That's a decentralized perpetual futures exchange. This is all just the beginning. In the future, it's all going to be decentralized, and you'll be able to trade anything and everything whenever you want. And that's just the way it's going to be. And all this like trying to regulate stuff is just like the old legacy dinosaurs trying to get a grip on something that is like whack-a-mole, that they eventually that you got to just go with it. But that's just my opinion. All right, it's 9:30, so I've been going on for an hour and a half. I've gone on longer today than I thought I was going to go on for. But I'll tell you what, when we do finally get to the bull run, right? And this is assuming that all the bulls are in fact incorrect, and we are still due a nice big move down. But when we are, confirmed that we are 100% in the next bull run, we can have so much fun, man. We can start to go into gem hunt, like proper gem hunting mode. Well, I suppose like the ideal place to be looking for gems, ideally, is right at the bottom of a bear cycle, right? And so if we do get this nice big move down, then yeah, like we can start to look for gems. I mean, if I go, sorry about that little headphone blast. So if we go into CoinMarketCap, there are currently, that's the bottom. What am I doing? 23,000 cryptocurrencies. I think I'm pretty sure when I found crypto in 2016, how many it was, I think like 1,000. I can't remember. There wasn't that many. Yeah, 23,000. So in those 23,000, amongst them, most of them are shit. Most of them are dog shit. But there are some gems in there. There are some gems that could 1,000x. And so it'd be kind of fun, right? Doing some fundamental analysis and looking for those gems. Martin says, when we started the course, it was on 12k. Oh yeah, because Martin remembers 12k. So just in the year and a half, it's doubled almost. And when I found it in 2016, I'm pretty sure, I can't remember, but man, I don't even think it was 1,000. Yeah, Marcus says, yeah, there was like 11k a year ago. Yeah, and most of them are dog shit. Yeah. Crazy. But there'll be some gems in there. There will be some beautiful gems in there. All right, wicked. Oh, let's wrap it up early. So I'll be back tomorrow at the same time, and that'll be on time, which will be nice. Unless there's any more questions. All right, let's wrap it up then. So thanks for being here, guys. I appreciate you all. And I'll be back same time tomorrow. See you guys.